Our club's always been a forum for visionaries, public figures, and decision makers to command attention to the issues of our time and inform the most relevant, compelling, and challenging conversations. Here we offer first-person access to dynamic political, business, and public personality.
The Canadian Club is one of the most important podiums anywhere in the world that a Canadian can speak to, tell Canadians what it is that they think, develop those thoughts. And so I want to thank you for that very, very much.
Please join me in thanking our esteemed panelists today.
Through our programs and events, including our youth and young leaders programs, our diversity partnerships, our joint events, and our media and social media opportunities, we offer you access to dynamic political, social, and business figures from abroad and right here at home.
The platform from which the eloquence of Canada has flowed all of that time, whether it be business, education, politics, sports, arts, and culture. If someone wants to say something to Canadians about this country and about the future of this country, this is the venue you choose.
Good afternoon again, everyone. My name is Glenn Parkinson, President of Canadian Club Toronto, and your host for today's event. And a special welcome to those of you joining us online at canadianclub.org. Whether online or in person, our events couldn't take place without sponsorship of our generous partners. Today's event is being sponsored by EY and Davies, so thank you for making this possible. We'd also like to thank Canadian Bankers Association, our season sponsor, and Air Canada, our airline partner for the year. Canada's Forest Trust also partners with us to offset the carbon impact of our season by planting a forest in our name and maintaining it to ensure its health and longevity. Now, as many of you know, Canadian Club Toronto invites young leaders to our events, and today we welcome a table with students from the University of Toronto's Mineral Engineering program and Toronto Metropolitan University. So welcome to that table too. Now, before we introduce our panelists today, I'd remind you that our events also involve the audience. So what questions do you have about Canada's mining sector and how to move it forward? Please use question cards on your table. You can submit your question and hold it up, and we'll bring it to the front to our moderator. Similarly, online, there's a button on the right-hand side of your screen that says click to submit a question. So if you use that, we'll bring it up to our moderator and include it in the discussion. At this time, I'd like to invite Theo Yamago, EY America's Metal and Mining Leader, to introduce today's guests. Welcome, Theo.
Hello, everyone, and thanks for inviting everybody to get out of PDAC and come here today. I'm sure there's other competing events, but this one is worth the attendance. Revitalizing the Canadian mining ecosystem is a really strong topic. There's been a lot of discussion lately around the future of the Canadian mining sector, and we can't wait to hear what our panelists have to say. So Glenn already did the intros. Yesterday we had a breakfast where I tried not to do a lot of bio reading. We all know that these are four individuals in the sector that are powerful, that have seen enough, that have insight, and we can't wait to hear. Now, I'm just going to reiterate their names because we did the head table. And so we have Ilan Bahar, co-head Global Mining and Metals at BMO Capital Markets. And we have Sean Boyd, chair of the board of Agnico Eagle. I mean, who doesn't know Sean Boyd, really? We have Aline Cote. I've heard of Aline Cote for many years, and she's the industrial co-lead for zinc and lead at Glencore. And last but not least, we have my friend Daniela Dimitrov, who's mining executive corporate director. The moderator today is also famous, so it's Tim Kiladze. He's the financial reporter for the Global Mail. and he'll be moderating right after my really, really short remarks, like I promised. We can talk a lot about ecosystem, but my colleagues know me very well for always thinking about the Serengeti as an example. Most of us have seen National Geographic, most of us have seen a lot of documents about animals, whether it's in the Arctic or in the Serengeti or somewhere in the Amazon. This is what an ecosystem is, and this is what mining ecosystem is about. Even the little player matter. And to kind of give an example of how it applies to somebody like me, because just by fluke, it's very interesting what the panel is made of today. Some years ago, I actually applied for a job at BMO Capital, so I could have been at BMO Capital. Many more years ago, I was a Falconbridge employee. I worked for Noranda and Falconbridge, the predecessors to Glencore. I worked at Brunswick Mine, that's in New Brunswick. I worked in Raglan, that's in the subarctic. And other years ago, I'm not gonna calculate the years, I actually did my PhD in rock mechanics by measuring in-situ stresses at LaRonde 2 and at Goldex. And later on, once I straightened out to get the PhD, I was part of a task force for the Goldex geotechnical issues. Last but not least, the last 10 years, I have worked with and for Daniela in all the companies she's been in. And this is what the ecosystem is about. There's nobody in this panel that I don't have a relationship with somewhat historically, even if I'm like the little buzzing insect of the Serengeti. So let's get Tim to come and get the panel on to start the discussion. We're all looking forward to it. You all work for companies that we look up to, and you all have experience we want to hear from. Thank you.
All right, I guess you can hear me. I can hear myself. You all saw the title of the presentation, Current Landscape of Canadian Mining and Its Aims for the Future, Strategies to Maintain Canada's Traditional Leadership in the Global Mining Arena. I know it's PDAC week. I know you're all tired. I'm going to make this as spicy as possible, partly to keep you awake. I like to characterize it as PDAC tends to have a lot of hype around it. It's hard to filter through the hype. Consider this the real talk. And I mean that from a national point of view because, Canada's mining ecosystem is challenged right now, and nothing changes unless you really address it. So that's what we're trying to do today, good and bad. And so we're going to discuss a lot. Critical minerals, which is a very sexy thing right now. You'd be surprised, you put critical minerals in a headline and people just click on it. It's the thing. Gold, and crucially, to some extent, how Canada lost its luster. For a bit of a brief background about myself, so I'm at the Globe, been at the Globe for 14 years now. I cover capital markets, broadly speaking, so anything that kind of touches finance, Bay Street. For a long time, as we all know, mining was a huge part of that. Energy, over time, it's shifted a little bit. But I'll give you a little bit of an anecdote. The summer I started, so it was June 2010. For those of you who remember back, that August was crazy. Kinross bid for Redback, BHP bid for Potash Corp, and the commodity supercycle just started from there. And it's wild because I was thinking back on that, prepping for this, and it's almost like another, planet or something when we compare to what we have today. And there's some good reasons for that. I think we're a bit more disciplined today, which is a good thing. But I wanted to start off with gold, in part because gold is sexy right now. It just hit a record high. And yet, it's still kind of just I don't know. There's not much hype around it here in Canada. So you're a gold expert. We can all kind of hypothesize, and we all kind of know some of the themes as to why gold, and gold miners in particular, aren't soaring, even though gold is at a record high. Why is it? Is it a crypto thing? Is it still people haunted from capital discipline decisions? What do you attribute it to?
I think there's a few things there. I think what we've had, though, is we've had a lot of buying from central banks over the last little while, and I think that's why gold's done well in the face of record high equity markets. So you've had buying of the physical, central banks looking to diversify their reserves. That's pushing the commodity price up. And I think from the gold equity side, I think investors are a little bit reluctant at this point in time because they feel there's no sense of urgency to need to own the equities now. I think what they're waiting for is a stronger signal coming out of the Fed relative to interest rates. So, our view over many, many years is that the best way to look at running a gold mining business is just look at running a good business that happens to mine for gold, because ultimately it comes down to returns. And there are still some good gold companies out there that can generate returns that have kept the investors' attention over an extended period of time. So they'll be back, but just order of magnitude. So August 2020, that was sort of when gold hit the previous all-time high. Our stock was $117, $118. Today it's $72. So there's a lot of gap to be made up, and that will be made up. If you look at the cash flow that's being generated from the good gold businesses, it's there. So I think that will work it out. We've seen it over many times where there's been a disparity between the price and the equities. It'll work itself out.
And to be honest, that's the thing that blows my mind. Like in a world in which a lot of tech companies have zero profit or minimal cash flow, like gold miners still make a lot of money, and yet they can't get much attention.
It'll turn.
And I don't mean that in a bad way.
Turn.
Yeah, no, I'd add to what Sean said. I mean, you step back and say, well, why would investors invest in gold companies, right? And there's lots of ways to invest in gold. You can invest in an ETF. You can invest in the companies. There's other ways to get exposure to it. And ultimately, what most investors would say is the reason they want to own the equity is to get leverage to the commodity price, and they want, on the way up, when they believe in the commodity price, they want positive leverage to a rising commodity price. I think, we just went through our conference last week, and a lot of discussion about this topic. And I think part of it is we've just seen a lot of cost inflation across the sector the last little while, and it's not because the companies aren't doing the right thing. I think the companies are doing the right thing in terms of managing their costs as best they can in a very inflationary environment. And so inflation's dissipating, costs are coming out of control, and hopefully the combination of that plus the potential for a gold price that breaks out as rates come down could absolutely result in the equities being receiving the attention they deserve. So that's sort of the glass half full perspective on what might happen this year.
Just quickly on that, your question is really driving what is this overall discussion today. It's a tough business. Mining's a tough business. And the trick is to actually build a quality business over time and do it in a way where you're actually adding value. And it's tricky. And so we're sitting here and the government's talking about critical metals and how do we actually take all of the expertise that exists and the ability to get capital from a senior level and actually turning it into good businesses. That is the challenge. And that is how difficult it is in this context. And so I think that's what we have to sort of think about, is how do we do it in a way that we can actually create value? And that's what's going to drive how we allocate capital and put it to the best use.
I was actually going to say exactly that. Part of I guess it all depends how you describe hype. If you describe hype from the perspective of a mining house, hype is often translated into capital injection. But no miner in the world will make decisions on capital spend based on spot pricing at all. So every mining house has its view of the world when it comes to commodity. Now, you can argue that gold is a commodity or a currency, depending on how you see things. But the point of the matter is that everyone takes a very long-term view to take decisions that, in most cases, are around $500 million, $1 billion or more, because where we're tending to mine these days is where there's no infrastructure, and that obviously requires to have a deep pocket and a backbone, which is why I think there is a buzz, if not a hype yet, but there's a lag, right? There's a lag between when we decide that the buzz becomes a hype and that your long-term view of prices is going to change enough for you to go back to your shareholder and actually say, my view of the world means that we can inject this capital and give you great returns because we run a good business.
And I think to continue to build on that, the critical minerals strategy, we've talked about the gold prices being at all-time high, copper prices, the fundamentals, supply-demand fundamentals for critical metals is strong, although we've seen some softness in the demand for EV. At the end of the day, the energy transition will happen. It may take us longer to get there. To have a critical minerals strategy that is successful, you really need to have a mining industry that is successful. Mm-hmm. And I think we come back to the necessity to make sure that our industry is successful in order to make sure that those strategies and initiatives that have been laid out and all the plans are really tightly connected to the mining industry.
And in terms of building out that industry, one of the benefits of having a strong gold price today is that from what I can tell, juniors in gold at least have a bit more ease financing relative to pretty much every other metal. Mm-hmm. What is it going to take, or how do we go about financing all the other metals and all the other juniors? Do we need to rethink or reconsider what financing looks like? We've seen some deals directly with EV manufacturers. We've seen some large majors come in, I guess this has happened historically. You buy a toehold or a small stake. Do we need to reconsider those things more now? Because what I worry about, I think what we all worry about, is that we all see this demand coming, but getting there is it feels a bit impossible. So maybe Ilan, from the finance side of things, what's being pitched right now?
So there's a lot to unpack there, and I wish I had a magic bullet. I don't. I guess you step back. It's absolutely been a very difficult environment for junior companies across not just critical minerals but also precious metals. The reasons for it, ultimately, when you drill down to the fundamental reason is that the resource-focused, the actively managed resource-focused funds have just been bleeding capital for a long time. I'll give you one stat, and it's not the most uplifting stat, but it's true. In Canada, the precious metal funds, since the start of 2012, their assets under management are down 2/3, roughly. So, and those active money managers, they're the ones that can make an active decision to support a financing by a junior company. So the issue ultimately is the equity. Government has, the last few years in critical minerals, both north and south of the border, been helping. We are seeing OEMs make investments for offtake in critical minerals. We're seeing strategics step in, and so there's other sources of capital coming. But ultimately, the issue is, finding that equity in the market. The thing is ultimately equity will go where it expects it can generate a return, right? Like if we all think about the personal decisions we make about where we allocate our investments, we invest in places we think will earn a return, and so capital will flow where it believes it can earn a return. And so the underlying question is how do you generate the belief that the broad population says we're going to allocate our capital to the mining sector, to the critical minerals thematic, and do it where I ask an active money manager to make that investment choice for me. So that's the objective. How to get there is the harder question. I think the awareness around critical minerals that's there is fantastic, and it's great, Tim, that you've been writing about it, and others have been, because it's starting to generate broader awareness about what we need as a sector, and hopefully starting to generate broader belief that there's a return that can be generated there.
I think too, when you double click on what are the reasons for that capital to have been disappearing, and Ilan talked about specialist funds in Canada, I think, are down to under $3 billion in capital. There are a number of levers that we need to pull, and I don't think that there is a magic bullet, like Ilan said. For example, permitting. We talked about in Canada, it's somewhere closer to 18 years for a project to be permitted. I think the global average might be 12 to 15 years. When you're a capital allocator, either you don't necessarily have that time horizon, even if you're in a PE fund. On a 10-year fund, you might be looking at 4 to 5 years from a capital allocation perspective, because you've got to raise the capital, allocate it, get out, and unwind the funds. So even with those longer time horizons, they're not long enough. And as an investor, how do you calculate a return on invested capital if you don't know when the capital is going to be allocated and you don't know what that time horizon looks like? And so using that as an example, one of the levers that we saw a recent announcement from the federal government that they're looking to pull is the acceleration of permitting. Mm-hmm. And getting that time period down from 12, 15, 18 years to something closer to 5. And that's a great initiative. And now we need to put a plan around that, create milestones around that, and execute on that. So strategies, plans, initiatives, for example, around permitting are great. Now let's go and execute on it. And there are other levers like Indigenous, like infrastructure, like overall economic conditions in Canada that are levers that we need to pull.
I was wondering from an institutional investor standpoint, more from the longer term investors. There's a public letter out today from a number of business leaders saying, Canadian pension funds need to invest more here. I think what tends to get lost or doesn't get discussed as much anymore is that a lot of long-term investors just have always avoided commodities because there's no sight as to where you're going to be in 10 years. From conversations you've all had, is that changing at all? There are some newer players in the market, like an Appian, that's just trying to attract some capital. But even still, I think they have like $3 billion in AUM. I could be wrong, but it's still pretty small. Like, is there more interest from these massive funds, whether it's GIC or Canadian pension funds, or dare we say Middle East money, which I think a lot of people don't like to talk about, but it's a huge driver of Brookfield's funds and things of that sort. Are they getting more comfortable with resources, or is it still a no-go zone?
Well,
go ahead.
Sorry. I've had I've been privy to being part of all the critical mineral tables in the last year. In the last year, with the government, with Minister Wilkinson and Minister Friedland, the point of the matter is, I think there's a realization from the government's part that not only are we not investing enough in Canada, but when we do and if we do, how do we compete with the rest of the world? Because that's the true problem we're facing right now, is that we're trying to build a very responsible ESG-dominated mining world here in Canada, here in Australia, here in Chile, where we're trying to exploit all these critical minerals and invest patient capital, as we have to call it these days. At the same time, not really understanding or knowing what's the market for the product that we're going to produce, that is a lot more costly than anything that, let's call it Asia and Central Asia, are generating, because their operational standards are completely different. So going back to your question about the funds and giving the funds certainty that they will have any sort of return on what is produced in Canada, I think that's where the government has to step in, and that's been at the heart of every discussion that we've been having is, okay, we've got natural resources in the ground, this is Canada, we're great. We've got great, competent, educated people to mine, fantastic. Not enough of them, but we have some. So now, how do we maintain funds in Canada to develop these assets? And then how do we convince the OEMs to actually buy at a premium because it's costing the mining world billions and billions and billions of dollars to manage according to ESG standards that we want to operate by, of course. And ESG is not just environment, right? That's E. There's S and there's G. And there's a realization that competition is absolutely unequal between what we will produce and what the rest of the we, meaning the Western industrial world, if I can be as general. So if we want the pension funds that in theory should be more risk adverse than any other funds, we need to find a way to work with the various countries that are facing this dilemma to ensure that there's some kind of floor premium guarantee from the state so that there is this understanding and this want to see this as an investment in the future, a real investment in the future with returns. Right now, we're not in a position to actually say that.
Well, the big money needs exposure to these commodities with the energy transition. It's how do they do it? And they're generally risk averse. But I think the reality now as a mining industry, it's only as good as the quality of the underlying deposits. And I would argue that over time, a lot of the best deposits have been found and mined. It's getting more challenging, not just in terms of the quality of the deposit from a grade perspective, but the location of these deposits. So the point now is for the industry to work with government, work with potential funders to, mines are made, they're not found. So it's how do we now take what we would classify and generalize as average deposits and make them work. And you make them work by improving permitting, creating some certainty. You make them work by providing some new capital, and that's probably some strategic capital from the government. Not that some of us aren't relying on the government to continue to build our business. So you've got to create some of that certainty. And I think the way you look at it is to say the starting point here in Canada is excellent in terms of skills, in terms of experience, in terms of the ecosystem that exists around the mining space. And it's how do we now work together? How are these bigger deposits going to get built? Everything's boxcar now. We used to build a mine for 100 million, 75 million. Now it's $1 billion US. So how do we partner? So what we've been doing more than we've ever done is Agnico's hallmark was, be careful where you go in the world, but we need to own everything 100%. And we were very successful doing that. We realized that's not the point anymore, is that we should be partnering with like-minded companies to spread the risk out, bring more capital in, have more skills brought to bear to actually make those next generations of mines. So I think what we find heartening over the last little while is not that the government has not been focused on mining, they've been focused on other things rather than mining. And maybe it's been taken for granted, not now, because they have a policy. But the reality is the critical metals policy is running into the reality of nature, which is those deposits. And that means we have to work smarter, we have to work together and build those partnerships to build that next generation of mines. And we can do it here.
What I find quite interesting in the last year or so, this is more of a comment than a question, but I would say in the last 6 months or so, it's gotten to the point whenever we write something tied to mining, particularly around juniors, myself and a colleague of mine, Niall, who specifically covers the mining industry, the other day we were talking about this at work, and we were like, do you get all these emails about desperation for the government to do something? And he was like, yeah, it's intense. And I don't know what the answer is, to be honest, because on one hand, the government is doing something, particularly on critical minerals, they put out this strategy. But there's a big kind of gray area, and if you veer too far in one way, I always use the example of you can run into the Trans Mountain Pipeline, which is government actually underwrites something, huge cost overruns. Everyone blames the government when the government was probably just trying to help the energy sector, And so I don't know what the answer is.
It's interesting. I made a list the other day of all of the programs and initiatives, actually before getting into PDAC, that have come out of the federal and provincial governments between the infrastructure banks, Canada, Ontario, Canada Growth Fund, obviously EDC and BDC that have been out there, R&D funds, and the list goes on. And I came up with a pretty long list. And I thought to myself, how is there a disconnect between all of these programs, plans, and initiatives and the view of the industry that perhaps the government has ignored the industry, and perhaps all of these plans and initiatives have not quite caught up to the industry. I saw, as part of the implementation of the United Nations Indigenous Rights Development Act in Canada about, I think, 3 years ago, the government had to come up with a 2-year plan as to how it was going to, an action plan. And it came out with it last year, and as part of the implementation plan, it's 181 initiatives to be coordinated between 25 federal agencies. That's going to be implemented over a 5-year period. I think something like that, where you take the themes that have been challenging for the industry and how we're going to create those into opportunities, perhaps is something that needs to be continued to be focused on. So whether that's permitting, partnership to de-risk infrastructure, partnership to de-risk capital investments, Indigenous partnerships, skills trading, and maybe overall economic conditions could be 5 themes that we can work on along with the government to debottleneck them and to take them from challenges and create them into opportunities.
Yeah, I think you're making a great point, Daniela, because there's a lot of programs. I think it's the lack of coordination. A lot of this has been put in over time and they're ad hoc. It's to have the industry work with the government to better coordinate all of those efforts and combine that coordinated effort with the skills and the track record of the industry that's been successful for years and the leadership we have here to actually make it happen. It's really time for action. There's been a lot of this. It's time to sort of get going.
I was going to say that it's a delicate question because these funds, they're taxpayers' money. So in theory, you also want to have capital discipline in how you distribute that money, because the idea is actually for Canada to benefit from these investments. And with the hype and the sexiness of critical minerals, a lot of junior mining companies pivoted from being base metal or gold assets company to wanting to get on the bandwagon of lithium, cobalt, everything that's not traded that has collapsed basically in the last year. So I think that part of the desperation, unfortunately, is linked to that and the fact that the government needs some level, like some specific criteria to be able to allocate Canadian money to these junior mining companies, because the idea is to actually move the needle, right? It's not just to fund the junior mining industry.
Yeah, I guess just one thing I'll add, Tim. It's undoubtedly a painful process when the junior end of the market goes through this sort of dislocation, but there's some positive to it. The positive to it is when you come out the back end of it, there are less companies, the better assets come to the forefront, the better management teams who have more experience developing mines come to the forefront. And what ends up happening is it becomes a more investable universe, which hopefully results in investors that aren't necessarily invested in the space and choose to enter into the space for the next cycle, perhaps. It hopefully results in them having better outcomes. So there is, you go through these moments in time where there is such angst in the space, but it is actually a somewhat healthy process because the result can be a better result.
Is there anybody, I'm thinking of in the Western world here, so kind of to your point, generally speaking, but a mining country that you think has got it right? And the reason why I'm asking this is because there's been a lot of talk about, for lack of a better way of saying it, Canada messed up and Australia got it right. And frankly, I actually think there's a lot of nuance in there. I was talking to somebody when I was doing my big piece in the fall, who's actually a Canadian who lives in Australia, and he just cut through that. And he said, what people don't realize is that Australia had the same supercycle crash that we had, but they had lithium, which China was buying up when nobody really wanted lithium. And they had iron ore, which China was also buying up. And so that kind of helped stabilize the industry. Now, that doesn't mean they've also done other things or they haven't done other things that have really benefited, but they kind of had this core that prevented a bit of a collapse like we had here. Where do you think we stand in terms of on the global stage and getting it right?
Well, from the Glencore point of view, we have assets in Canada, assets in Australia, assets in Kazakhstan, assets in Peru. And from what I can see, no one got it right. No offense to anyone in the room that's Australian, Kazakh, or Peruvian. I think this is new to everyone. I think you're right in saying that there's massive nuance in where people failed. We haven't failed. All these countries have failed at different pain points,
right?
If I can say. But I mean, we have something that we have to leverage on, and it's something that we often talk about in this critical mineral table, which is we've got the greenest power on Earth. So when it comes to trying to generating a hype for the quality of the metal or an edge in the quality of the metal that we can produce that no one else can, we have to bank on how to better use our green power. 80% of Canada is green in regards to the power generation, and Canada as a whole is working to making it greener. Now, I think that where we got it wrong is that we didn't exploit that. I think that was a bigger lever to pull than anyone would have thought probably a decade ago. A decade ago, I was in the mining industry, obviously, and ESG was this noise, right? And now it's obviously on the forefront of what we do, and it's become our modus operandi, it's our way of doing. But we had to hear it and understand. So the point of the matter is I think hindsight is always 20/20. I think Canada could have done it much better in banking on that leverage that none of the other countries have. Australia has resources, yes, but it doesn't have green power. And I think where Australia has failed, if I may, for living that pain point, from living that pain point on a weekly basis, is that I think they have failed to recognize that the mining industry will need a lot more human resources to actually operate everything that they have going. And if I may, we're going to hit that wall as Canada very, very soon, because if all goes well, and if everyone in this room is convinced, right, that the mining industry in Canada is going to soar, and we're going to generate the perfect storm of building every project on the map, we have no people to manage these assets. So encourage your children, because this is where it has to start, right? If you're thinking of having children, or if you have people, if you've got kids in kindergarten, invite them to start learning about mining. Joking aside, it's the next problem.
Yeah, totally. I actually don't think we got it wrong relative to others. I actually think we got it right. Because we spend too much time looking behind and say, oh my God, Inco's gone, and Falconbridge is gone, and Noranda's gone. Yeah, that was a lost opportunity of mining leadership, not a lost opportunity from the government and policy. It was a lost opportunity where Canada should have had a company of the size of BHP headquartered here. So, but that's gone. Let's not worry about that. Let's look at what we have and look at what we've created. And the reason I can say that is 25 years ago, we had $50 million in revenue. Our EBITDA was $3 million. So it's not what we've built in 25 years, it's how we've built it. And what I think Canadians need to understand is the contribution mining brings to communities. And I think that's what the government's beginning to realize as they focused on critical metals, is they're realizing, my goodness, look what these mines are doing. Look what the capacity of these mines have. We're doing presentations in Ottawa, and 4 members of the US Embassy show up at a conversation around Nunavut. And so there's the potential to have meaningful impact. The government is seeing it now. And all it is now is coordination, mobilizing the expertise and the assets. And I think when people look and say, well, it could have been this, it could have been that, we should have done this, we should have done that. Mining is hard. And it comes down, we're dealing with nature, and nature provides that uncertainty. Now, there are ways that we can make our lives easier and do it in a way where it's not impacting negatively ESG and all those other things, and that's what we have to work together. The light bulb went on. Everybody realizes the opportunity set now. Everybody sees a sense of urgency of what needs to be done. We're not really clear exactly what to do yet, but the discussions are ongoing, whether there's the roundtables here, whether it's at conferences for investors, Everybody realized that mining's got an important role to play in the world over the next few decades, and it's a time now to bring that expertise together and work in partnership with governments and work together.
At the BMO conference, one of the speakers was Jigar from the DOE. And I feel like everybody knows who Jigar is. He's been at all the conferences. He's very active in communicating. He is always talking about the coordination between the 10,000 experts that they have to do due diligence on projects, to the hundreds of people that they have working at the DOE to process the inquiries that come in, to the coordination that they do around facilitating permitting. Not cutting permitting, but facilitating paperwork, making sure that they're coordinated, saying that, okay, this is an important project, it's on this track, let's make sure it's on the same track everywhere else. And I think to Sean's point, that coordination and also the connectivity of all of these programs to mining. So if we're gonna give billions of dollars in subsidies to Northvolt or Redwood or Ascend to build a battery manufacturing facility in Ontario, what are all of the other things that work their way to the mining industry that need to be connected to that capital allocation that we've made to bring manufacturing, for example, into a province in Canada? So that's where I feel we could be doing a better job, and we could do better.
So here's a simple example. And this just came up recently where we were on another panel about a month ago, and there was a senior person from the Department of National Defence in Canada, and they're investing billions and billions of dollars in the far north. And we sort of got to talking and say, well, wait a minute, you're building infrastructure, we build infrastructure. Why aren't we talking? There is an exercise going on through Arctic 360 where they're starting to map all the activity in the north, including where likely future mining infrastructure is going to be, where military infrastructure should be. So it sounds like, why didn't we think of this earlier? Because we need airstrips, they need airstrips. We need presence for sovereignty, we bring presence. So how do we strategically work together and create that story? The story shouldn't just be about resource development in this country. The story should be we're moving north, that's where the deposits are likely going to be. It should be about sovereignty, it should be about defense, it should be about Indigenous economic reconciliation, it should be about green power with small micro-nuclear reactors. It should be about all of those things which are around. It's a matter of pulling it all together now. And we need to spin that story because there's a message here. There's a message to our allies, there's a message to our adversaries, there's a message to our Inuit partners, and there's a message to the 40 million Canadians. Look, mining is going to help us generate a tremendous amount of wealth. So let's start working on it.
And building off of that, I think this is part of the answer, but there's actually been multiple questions that have come in from the audience tied to effectively the human resources side of the industry. One of which is tied to, how do we still ensure that mining becomes more and more diverse, particularly with women? But there's been a few things here about new graduates and bringing, as you were saying, people into the industry. And I can tell you from my point of view, although I'm getting a little bit older now, I'm 37.
That's really old.
And I always say, I'm the generation that, you look back to like kind of the last decade that went into tech. And that's changing a bit now because of what's happened in the markets. But to use a phrase we've brought up a few times today, mining just isn't sexy anymore, And how do we change that? Because I think I've seen some of these numbers, and even just the number of grads in mining engineering programs, things of that sort. It's all just, yeah.
So, like most major companies at Glencore, we want to become more diversified, more inclusive. I guess I'm sort of part of the proof, yeah? Mm-hmm. This being said, I think there's a lot more that can be done, and we keep thinking about this because we don't want this to be a tick-the-box exercise. We want this to be meaningful. We want to create an environment where everyone wants to come to work, because right now, there are quotas and targets, and I'm not going to get into that. That's not why we want to do this. We want to do this because there's an issue with the whole mining sector and actually colloquially calling them bums in seats. We don't have enough resources right now. We don't have enough operators, and that's everywhere in the world. And I think we're missing the point in trying to fill these positions by sort of neglecting 50% of the world's population. So I think that it has to be a multi-speed approach in how we solve this, because the fundamental is that it has to be solved in the womb, really, where we have to start with children. But at the same time, we have to take advantage of the fact that socially, in a lot of the areas where we operate, a lot of women are available to become fantastic operators, the best operators we have in Kazakhstan. In Kazakhstan, 17% of our manpower, funny, 17% of our human resources that are operators are females. They are fantastic operators. And if Kazakhstan, being an emerging economy, can change their environment to enable 17% of their operators to be women, we certainly can in any country where we operate. And so it's actually part of the solution. But it's part of the solution. Then we have to find a way to incentivize mining and sciences across the board, so that we have more than 4 graduates a year per university in Canada, of which 1 will be female.
And if I can throw something on the table too, because I don't think it gets talked about enough, is money. Like, why not just throw money at it? I know that sounds kind of ridiculous, but I think at the end of the day, a lot of young people went into tech because they were like, oh, I can get options, right? I can get, has there been any discussion of that? Or are they already paid pretty well?
I mean, you can't do reverse inequity either. This being said, money doesn't solve life issues in regards to, if we go to gender for a proxy for diversification,
yeah.
so follow me on this, the issue is more lifestyle. You need to enable life to actually go on as you're mining, and I think we can do this. Obviously, we've proven that we can do it throughout 18 months of COVID. None of our assets stopped operating, and it was still functioning pretty well. So I think we just have to put our minds to it. Money is not, it's part of the solution, but changing our mindset as to what efficiency means. Efficiency doesn't mean necessarily 14 hours a day presence at the office. And I think we just have to put our minds together and make this appealing and make the environment slightly more flexible. And it doesn't mean if you don't work from the office, as an example, that you're not productive, because it actually doesn't mean because you're in the office you are type thing.
Yeah.
And how can we tell a better story, to Sean's point, that we got to connect? I don't know about your generation, Tim, but I think the younger generation, when I look at my nieces and nephews, they want to be part of that energy transition. They want to be part of creating a greener world. So how do we tell a better story and connect those objectives with the fact that the mining industry plays a critical role in achieving those objectives? And I think doing a bit of listening to the younger generation, because we can always do better at listening. And maybe lastly, how do we look at capabilities? Because if I think back to as I was progressing through my career, and we're looking for a general manager for a particular operation that had some environmental issues, that had some labor issues, and the job description would start with 15 years mining engineering, underground experience, et cetera. But at the end of the day, that individual is the CEO in a sense of an operation. So the capabilities around leadership and management and developing those skill sets. And when we look at the pandemic, we didn't have a playbook for the pandemic. We all adapted and used the capabilities of adaptability, flexibility, resilience to figure out how to pivot our operations. And I think a focus on capabilities and drawing other talent from other industries into our industry, because we're a cool place to be, could be a way to attract and retain.
Yeah, maybe Tim, I'll just add a bit. You think about the, we hire a lot of new grads in an investment bank, and And when we hire them, we also say to them, well, what group would you prefer to be in? And they get choices between tech and diversified and real estate and metals and mining and energy and so on. And it's a pretty interesting process you go through. And the dialogue you often have with a new graduate is, and it's choices they made earlier actually when they were in high school, is making choices that expand their options rather than reduce their options, right? And so the thing ultimately I think comes down to branding, and you have to do it very early. It's actually when kids are in high school and before that, which actually really matters. And they have to make choices around the universities they go to where they believe this is the sector they can build a long-term career. And they're actually, by choosing to specialize in this sector, they're actually not specializing. They have a world of opportunity because it's a global industry. We're a global leader in it. The know-how here is almost second to none in most countries. The training is extraordinary. And by the way, they get to see the whole world as they move through the industry. It's an amazing opportunity. But I sit on the board of Mining Matters, which is it's a Canadian charitable organization. And I joined a number of years ago because what Mining Matters does, it's sort of grassroots work in Canada about, in particular, educating educators, teachers about the benefits of mining. Uplifting communities in difficult parts of the world, the job opportunities, everything I just talked about. And so, I think it is a branding issue because it's an extraordinary career opportunity, and we just have to get the message out there more.
Absolutely.
On Mining Matters, what you need to do there, what your group needs to do, is the kids study rocks in grade 4. I've gone into schools and talked to grade 4 about rocks. I couldn't get out of there. They missed their recess. They wanted to talk about it. Something happens between grade 4 and high school. So everybody in this room that's related to mining should talk to Mining Matters and go to your local school. Find out at what point during the school year they talk about rocks, and go in. We'll give you the helmet with the light on it, which I took in, and they all wanted to try it on. But we got to start there.
Absolutely.
Because there's a great story to tell.
It is. I think we might be done. Are we done?
Well, I think we probably do have to hold it there.
Okay.
But I think we had a great discussion, and I really want to thank everybody for such a terrific narrative. My son's in grade 4 in North Toronto right now studying rocks.
Ilan's going to go in and talk to them about it.
Yeah, that's right.
Sean will lend me a hard hat.
But look, great messages around it takes the whole ecosystem. Mines are made and they're not found, and coordination even beyond the sector. I hadn't thought about the DND and the North narrative, but it's really a great point, and it's a great story to get out, but we need to get it out. So thank you, Eileen, Daniela, Ilan, Sean, for sharing your time with us this afternoon. Thank you, Tim, for just the right amount of spice, and appreciate your moderating as always. Before we finish, we have got a really fun evening event March 27th at the LinkedIn offices. It's focused on what else but professional networking. Should be a lot of fun. Join us if you can, March 27th. Thanks to our sponsors, EY and Davies, today. And let me conclude by also thanking our AV partner, Van Valkenburg Communications, VVC Live, for their consistently excellent support. Have a great afternoon and hope to see you again soon. Thank you.